Hey, what's going on, everybody? Hey, welcome to another trading video. This is Trader Jeff Moore, author of the book Trading Part-Time. Hey, thanks for being here. Today I'm going to talk about how to spot trend reversals using the TTM squeeze. Let me just talk really quickly about a trend reversal. Now, I'm going to focus specifically right now on the bullish trend reversals. Since our market has been getting punished, beat down, I think it's appropriate to talk about bullish reversals. Okay, so in order to get a bullish trend reversal, first, the stock has to be moving down. But how do we spot a reversal using the TTM squeeze? I'm going to talk about a concept of divergence first. Okay, and again, if you've heard of divergence before, I highly encourage you to stick around and listen to this video because I might show you a concept that you didn't know before, because I'm going to incorporate the squeeze in addition to the divergence. Okay, so what is a divergence? The divergence is whenever the price, and again, this is my bad representation of price, but let's say price is in a downtrend. This is a low, this is a high, this is a low, this is a high. And then the indicator, let's just say the TTM squeeze indicator, what's happened is the indicator is sloping to the upside, but the price is sloping to the downside. When you have that on the chart, that is a bullish divergence, and there is a higher than normal probability that that downtrend is now coming to an end. Okay, now that's our normal way of using the divergence, but let's add a caveat. So, and again, I'll show you an example in a minute on the chart, don't worry, but let's say this third hump is underneath. It looks like that, so it keeps getting higher, and then the price goes down, and then the price starts to consolidate, and you get a squeeze. So what you have is you have a divergence that leads into a squeeze. So if you can have a divergence that leads into a squeeze, then there is a higher probability that that trend, that downtrend, is coming to an end, and that squeeze is going to fire to the upside. Now, we don't know that with a certainty. It's all a probability game. But you go back and you back test what I'm about to show you on several stocks, and then you make the decision for yourself. But that's divergence. We're looking for the divergence. But we're looking for that divergence to lead into a squeeze. For those of you that follow me, you know all these little colors on the screen and all that good stuff. But take a look at this period right here of McDonald's. McDonald's was in a beautiful uptrend. How do we know that? Well, if you've been watching my videos in the past, you know that when the blue is above the red, which is above the pink, we have a beautiful uptrend, right? And then one of the things that I'll alert you to, and I talk about it all the time, is on the TTM squeeze indicator, this light blue and dark blue, that's bullish momentum. Now, the light blue is strong bullish momentum, and the dark blue is, it's still bullish momentum, but it's weakening. Now, whenever you have a strong uptrend, okay, you're going to have these moving averages stacked, the 8 above the 21 above the 34, and then this TTM squeeze momentum never goes below 0. And how do we know that? Well, it stayed blue, bottom line. You see over here, it's red and yellow, but it stayed blue. This is a strong uptrend. When that's going on, you know, our focus obviously is still the bullish side. And if it's above this 8 right here, well, then you know we drop down to smaller time frames. But let's focus on divergence. Now, you did have a small kind of momentum drop here, which you can see right here. But again, the price stayed above the 34 and also stayed above the 50, so we're fine. But look at right here. Price broke below the 50. Uh-oh, the candle turned red, which is also represented down here in the TTM squeeze indicator. And again, if you've heard this concept before, divergence, keep sticking around. You're going to like what I have to say, okay? You're going to like what I have to say. Now, was McDonald's the one I was looking at here? Okay, hang on. Maybe it wasn't McDonald's. But again, just remember this concept. Remember this, remember this, remember this. Okay, let me go back over here. Maybe it wasn't McDonald's. Maybe it was Starbucks. It was Starbucks, my bad. Everything I just said was a good review for you. But let's look at Starbucks. Same concept. Staying above. We have that small hiccup. Price stayed above the 50, but here we go. Now it broke below the 50 right here. Red candle, okay? So we see here the momentum on the squeeze indicator dipped below zero. So it went from blue to red. Dark red means strong bearish momentum. Yellow is still bearish momentum, but that bearish momentum is decreasing. Now, it doesn't mean that it's just going to reverse right away, because look at the trend. It went down. But now, remember what I said about divergences, because we're going to go ahead and zoom in for you. Now, if you'll notice also on the bottom, I got this MACD. It's pretty interesting because the MACD histogram, you've got the histogram part here, and then you've got these two lines. The two lines represent the long-term momentum, and the histogram represents the short-term momentum. These short-term momentum divergences can cause these short upswings, and if you're a short-term trader, then that can be very useful. But if you look at this, the two lines, you can see that it's started to slope up and it's going up. Now, here we go. So let's take a look at the momentum here. So right now you've got price dipping to the low side, right? Because again, we're underneath a pink. It's a downtrend. So these moving averages are stacked, but now they're stacked underneath. That's bearish. So when is this bad boy going to reverse? So if we take a look at price here, see that line that I drew? Price here is lower than price here. But start to take a look at this TTM squeeze momentum. Do you see how the momentum, okay, so this is keep going down. I mean, doesn't mean that it's going to reverse right away, because again, we're still looking for a squeeze, but I'm going to show you this. Okay, so you can already start to see the momentum on the TTM squeeze, the bearish pressure is dying down. Okay, so this hump right here is above that hump. But then price is lower than that price here. Now, take a look at that little hump right there. The momentum to the downside is, you can see that it's weakening. Even though price is going down, you can see that it's weakening. Now, look what this led into. Boom, this squeeze. So what you can look at whenever you have a downtrending pair like what's going on right now, everything, well, not everything, but the majority, this is what's happening. You've got to be patient. You've got this hump. Let this hump start to play out, form a divergence into a squeeze. And then, boom, it fired to the upside. So now let's look at the whole bigger picture. Right here, boom. The candle started to turn from red to yellow. Again, you can see the momentum there, but that divergence leading into a squeeze, boom, rocket launch. Now, it didn't make it back up to the highs, but if you're trading options, think about how much money you can make during that time period. So you've got a divergence leading into a squeeze. You can position size in the squeeze, and then, boom, if it fires to the upside, you are golden. If you do that, you back test it on your own, you will see for yourself. If you want to know more specifically about the rule or rules, then I highly encourage you to check out my Options Elite Master Course. Yes, I talk about the squeeze hardcore, but we talk about, we get more into specific questions I've been getting is, hey man, these videos are really good, but is there anything else in your membership that you offer that's not in the free videos? Oh yes. Oh yes. And we don't just talk about the squeeze. We talk about butterflies, calendars. We go into detail about bull flag, just different strategies. Again, my primary focus is the squeeze, but I go deep into those concepts, what options to choose, and again, when to get out, all that stuff, because that's the most important thing. It's not about getting into the trade, it's about getting out. If options are your thing, there's a lot of people out there that teach options, but if you like the way that I'm teaching here, then imagine what's inside the university.